Hey guys, welcome back. I'm RexFinance, and today we're bringing back the popular series, my 3 stock picks for each month. And today, of course, we're going to be talking about my top 3 stock picks for the month of July. Now, before we get into that, I have to say we're getting so close to 5,000 subscribers. This growth has been insane, so don't be the reason the growth stops. So if you're new or returning and not yet subscribed yet, if that subscribe button is not grayed out, if it does not say subscribed, you're doing it wrong, so fix that. And also, before we get into this video, I should probably say I won't be talking about Workhorse very much, and I know a lot of my viewers come to my channel because of that company and Workhorse, and because I invested in them when it was worth $2.50 a share, and today it hit over $15 a share. So shout out to all you guys that made a lot of money today, but I won't be talking about them in today's video very much. But come Wednesday, stay tuned for Wednesday night's video. I'll be talking about Workhorse quite a bit. So I have a pretty dang strong track record with my stock picks on YouTube. So can I live up to the hype? Can I raise the bar or at least meet my previous bar? And we're going to have to see over the month of July. I've had stock picks like Stitch Fix that went up 50% in a month's time. I've had stock picks like Workhorse, of course, which is up 300, 400% plus over the past month. So, today I'm going to try and live up to the hype of producing my viewers some financial success. A lot of YouTubers nowadays could care less about their viewers and their investing success, investing goals, but I'm different. I care about you guys and I want you guys to make money. Most financial YouTubers are just out here to farm views and ad revenue, and that's it. But I want to help you guys out. So my top 3 stock picks is a monthly series I do on my channel, obviously, where I pick my top 3 stock picks for each corresponding month. Now, this does not necessarily mean I'm going to be investing in the companies that I present to you today, but it means I have my eye on them and I could potentially be investing in these companies in the near future. Also, if you like this type of video, don't be afraid to hit the like button. Also, comment and tell me what you guys' stock picks are for July, because I would love to know. And let me tell you, this could have been the easiest freaking video I've ever made. But no, I dug deep. I could have told you, hey, just invest in SPAC mergers, especially the electric vehicle ones. I mean, the electric vehicle sector is just booming. And if you invest in the electric vehicle sector right now, chances are you're going to produce some pretty massive gains. But I dug a little deeper than that, and I'm bringing you 3 companies that you more than likely have never heard of. And if you have heard of them, it's because I have talked about them on my channel briefly in the past. So the first stock on my list is actually a company I currently own, as you can see on the stock list behind me. It is EROS International, and this company is going to have a massive July, in my opinion. They're completing a merger with STX Entertainment, finally. And this is a company that is very similar to Netflix. They produce movies and also TV shows, and there's a subscription service that consumers can purchase for a monthly or annual fee, where they can access all of EROS's library and also in the future all of STX's library. Now, this company is also going to have a big July because of that merger, but also because of their deal they have with Amazon Prime Movie. And there are also lots of STX Entertainment films on Netflix currently that are making big bucks. If you guys are interested in this company, just Google STX Entertainment Films or EROS International Films, and I guarantee you, you're going to realize that some of these films you've actually watched and you didn't realize they were made by this company. Now, I really like this company, especially in June, because after their merger with STX Entertainment, it's going to become an American company with an American CEO and management team. There's only 2 things that EROS International has lacked over the past few months, and that is good management and also growing subscription numbers. Now, after this merger, they're going to have both of those. They're already working on increasing their subscription numbers, and you've seen that over the previous few quarters, and adding STX Entertainment to the company is just going to be massive. It's going to add to the market cap drastically. Now, that also means there's going to be a lot more shares outstanding. So who really knows where this company will be valued at the end of July, but I have a very good feeling we're going to be sitting at $6 or higher. So my personal pick, invest now in EROS International. In fact, I'm going to be doubling down on my position tomorrow when my paycheck comes in, because I believe that much in this company. I only have a measly $1,400 invested, and if I can get that above $2,000, I think I can seriously turn that into $6,000 or more by the end of the summer. So EROS International in itself, let's say the STX Entertainment merger fails. EROS International itself has a very high focus in the Indian market, meaning they focus on consumers in India. Now, India has a growing economy, which means more and more people are able to afford a service like Netflix or EROS International. EROS is the Netflix over in India for the most part, and I really believe EROS can be bigger than Netflix with the American side coming in as well as the Indian base they already have. In addition to that, the Indian people are spending more and more time at home, just like we are here in America because of the disease that's going around. So yes, chances are tomorrow I'll be investing around $1,300 more into this company. I suggest you do the same because this is free money in my opinion. Now the next company we're going to talk about is Upwork, ticker symbol UPWK. Upwork is a global freelancing platform where businesses and individuals connect to conduct business. And as you can see over the past 3 months, the stock is up 132%. So you may be wondering, why Rex? Why invest in Upwork? It's up so much over the past 3 months. Aren't I going to lose money? Well, I'm going to help stem the tide of fear in your body with my words, so pay attention. If we look at the 5-year chart, this is a recent IPO. They IPO'd in late 2018 at a price of $23. So when you look at this chart, they are still under their IPO price by quite a big margin. Now, if we look towards the end here, obviously we've seen a big spike up, and I really think that spike's going to continue. I think that Upwork's business has extremely benefited from the disease that's going around. It's an online marketplace, like I said. Consumers, businesses, and individuals can't go out and connect in person anymore to conduct business. So where do they go? They go online to websites like Fiverr or Upwork. And Upwork is really, really benefiting from this whole scenario, in my opinion. And chances are there's a lot of people that are trying this freelancing platform for the first time because of this disease. And if they like it, chances are they're going to stick around as a customer of Upwork. So I really believe Upwork has an extremely attractive valuation currently. Their business fundamentals are great, and their growth is very, very impressive. In fact, they have almost a 22% quarter-over-quarter revenue growth, meaning last quarter they produced 22% less revenue than they did in the current quarter results. And I really believe that that trend is going to continue. This company's been growing revenues for a long time. They are very, very profitable. Last quarter, they had $212 million in total profit, which is insane when you consider that the market cap of Upwork is $1.64 billion. That's a lot of profit for a market cap that low. I also think Upwork has an awesome balance sheet. They have $145 million in cash and only just over $50 million in debt, meaning their debt to equity ratio is a 22. That is about as good of a balance sheet as you're going to find in the stock market. So the third and final stock pick for July is Cirrus Logic. I actually advised my twin brother, who is getting into investing because of me, to invest in this company. He's seen a minor loss, as you see, over the past 3 months. It's seen a downward trend, but towards the end here, you've seen it's kind of recovering. Now, this could be because Jeremy from Financial Education said he's going to be buying more of this company, but I really just think investors are seeing that this company is really undervalued currently. Cirrus Logic is an audio chip producer and manufacturer for smartphones, laptops, tablets, you name it. Chances are the way you're hearing my voice right now is because of Cirrus Logic. So you may be wondering, why do companies choose to work with Cirrus Logic over all these other different companies that produce audio chips? And the answer is really pretty simple. Cirrus Logic's only sole focus is on producing the best high-quality audio chips possible. There's been a big push for speakers in tablets and iPhones, and other smartphones for that matter, for speakers that can match a JBL speaker sound system or a Bose sound system. They want that type of sound coming out from your smartphone or tablet, and Cirrus Logic is at the cutting edge of that. In addition, because of the next 5G wave that's coming up, there's going to be a lot more smartphones and tablets that are 5G compatible coming, which means the demand for Cirrus Logic audio chips is only going to go up. So Cirrus Logic is a company that is always growing revenues. They are always growing revenue. They're a very profitable company, and they are very undervalued at $60 per share in my opinion. Now, the only risk with this company is that 70% of their revenues come from one company, and that one company is Apple. And if their contract or their business ever fell through with Apple, Cirrus Logic's stock price would tank to $15 a share, $20 a share, if not lower. So that's the biggest risk investing in this company. However, the management team at Cirrus Logic has came out and said they're focused on bringing new customers in to hopefully diversify their revenue more throughout their different customer base. So they're addressing that risk with investing in their company, and if they can successfully address that risk and even decrease Apple's portion of their revenues to below 60%, to 50%, that would be huge, and this company is going to be valued over $100 per share. So yes, I don't think the companies that are already working with Cirrus Logic are going to cut their ties with Cirrus Logic. Most of them have been partners with Cirrus for years on years on years. And there's a reason for that. It's because they get along, their chips work, and they're in high demand. These companies don't want to work with companies that's third and fourth focus is audio chips. They want to work with a company whose sole and only purpose is audio chips, and that's what Cirrus Logic is. So in closing, that is all I had for you guys today. If you guys enjoyed, leave a like down below. Also subscribe if you're new or returning. Like I said, I hope you guys really enjoyed these 3 stock picks for July. And let me know down below what you guys' stock picks for July are, because I'm interested in what my viewers are investing in. So with that, I'll have a new video out on Wednesday, so have a great rest of your Monday and a great Tuesday, and I'll see you guys on Wednesday with a new workhorse video. Peace out.